What's going on to the AMC stock family? In today's video, I have never been this excited for a video, but because we are talking about the one, the only Cathie Wood, this is going to be an extremely interesting video. Now, before talking too much about the introduction, yes, AMC is down on the day. In fact, it is down almost 5%, but wait a minute, take a look at the volume. Before you start panicking, I first want to talk about the stagnation that is going on with the 1-year time frame. And yes, I did say 1 year or the daily time frame. I am not trying to understand or analyze the 1 day to 1 minute time frame. That is just going to be way too much scrutiny. We don't need the 1 day, 1 minute time frame because then we will not understand the bigger idea. The bigger idea is that if you were to actually take a look at the 1 minute chart, you would be doing yourself wrong. Here's why. It's because you are going to start having so much more fear. I do not have any fear based off this one chart. This actually tells me that we have a lot of support levels going on right now. Now, I know right now we're not talking about Cathie Wood, but I just wanted to mention that very quickly because I know that people are stressed right now. I know that there's a lot of FUD. In fact, the group leadership has already went down by 1 rank. It is now ranked 4th in the group. Last time we checked, we are ranked 3rd in the group, but Netflix is still ranked 1st in the group. So what I want to say about this is that in the leisure, movies, and related group, we are being competed against Netflix, the one, the only Netflix. Netflix is a $600 stock. The composite rating, 72. And by the way, this rating is not coming from any regular analyst. It is coming from Investors Business Daily, which is partnered with CNBC. So if they're rating AMC at least a 72 rating, that means that AMC is doing something right. And of course they are doing something right. Their earnings per share percentage change since last quarter is now 87% since last quarter. And let's not forget about the sales percent change since last quarter, 2,253%. Which other company is giving you this much of a return? Which other company is allowing this much growth within 1 quarter? And remember, I did not say 1 year, I said just 1 quarter. Now, before we get into Cathie Wood, I want to talk about the volume very quickly. So we just talked about the price. No, I am not worried. And by the way, if you guys are worried about AMC, if you guys are worried about the technical analysis, because that would really be the ultimate point here. In my opinion, there's no reason to worry about the fundamentals because right now, the fundamentals are looking the absolute best for AMC, the best that they have been in quite a while. So it is most definitely the technical analysis, and I understand that. However, what I must say about that is if you guys are worrying, let me know in the comment section below. I really want to understand what is causing a lot of this FUD. And I know that right now there is FUD being thrown around because the volume used to be 100 million. For those of you guys that have been constantly updating yourself with the due diligence, you guys understand that on this channel, we've been talking about how the volume has been constantly around 100 million. It has now fell more than half of that. We are at basically 40 million in the volume. This is a significant drop, 100 million to 40 million. So again, if you guys are wondering why the price is down, it has nothing to do with fundamentals. So for any analyst saying that AMC should be worth $1 a share, $5 a share, $10 a share, yes, everyone does have their own opinions, but that should not be the reason, in my opinion, why there should be a lot of fear. Now, there also should not be a lot of fear because we have the one, the only Cathie Wood backing our side. So it's $36.77 price. Hear what Cathie Wood has to say. Once we hear what she ends up saying, and this was only made 4 days ago, and if she is having this much of a market sentiment, that makes me even more bullish for the future. And that really, really does, because what she ends up talking about is some very important information, and you guys will not understand unless you take a listen for yourself. And also, let me know in the comment section below if these videos are valuable for you. The whole point of these videos is to provide value so that we can eliminate fear, uncertainty, and doubt, and so we can eliminate FUD. We do not need another day where the volume drops by more than half. If you guys have any feedback, make sure to drop it down in the comment section below. And if you guys like this video, make sure to give it a thumbs up.
Destruction that it did and supply chains really being thrown off. We've been through a period here of inflation, which I think investors are baking into the cake. That's the underlying assumption out there, that we're in an inflationary period and that it was turbocharged by the supply chain disruptions that occurred during the coronavirus. And of course, they will be focused on monetary policy when they say that. I am a student of economic history and I've lived quite a bit of it myself. So seen a lot of markets and started in the business during the 70s. I was in college when inflation was raging. So I know what that is. And I truly believe we are not going back there and that anyone planning for it is probably going to be making some mistakes. So the 3 sources of deflation that we see, to go into a little more detail, on the innovation side, technologically enabled innovation, we are in a period today like we have never been, never. I mean, you have to go back to telephone, electricity, and automobile to see 3 major technologically enabled sources of innovation evolving at the same time. Today, we have five platforms, DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology, all of which are deflationary, and not just by a little bit either. Jeff Gundlach and Howard Marks, and I think Stan Druckenmiller and Ray Dalio, all of them, I think, have been very, very concerned about a deflationary bust. And we agree with them in this respect. We think it's going to be balanced by a deflationary boom. So that's where we differ. But where we agree is that there are companies who thought the world would never change and have been, again, catering to short-term shareholders who wanted that extra penny or two in earnings, and so got it by having the companies leverage up and take more debt and shrink the number of shares. And they've also been focused on dividends. They are probably saddled with products and services that will become obsolete because of the record-breaking amount of innovation taking place today. And in order to service their debt, they are going to have to cut prices and move those goods and services that are on their way out anyway. So I am concerned about that. And I think there's going to be a lot of confusion around it as well. So that's why we keep our eye on the innovation ball, because that is going to balance these issues out to a great extent. But what it will also mean is that the traditional GDP numbers we're going to be seeing are going to be very low. And so, and growth will seem very scarce. I think it will proliferate over time, and that some of the companies that we own, the stocks we own, they're not in any index out there. So a lot of public market investors aren't exposed to them, but we think there are going to be a lot more of those opportunities going forward. There will be a lot of job displacement. There will be, no question about it. In fact, when we started our company in 2014, Oxford University had just put out a piece which said, and it was about the United States, that said 47% of all jobs in the United States would be lost to automation and artificial intelligence by 2035. And they left it there. Hair on fire, headlines screaming, a lot of fear about automation. We got the question every meeting. And what they had neglected to do, which we did, was finish the story. So with automation and artificial intelligence, productivity is going to go up dramatically. We think more than it ever has, certainly in modern times. And with productivity increases comes more wealth creation and more GDP creation. And according to our estimates, in the year 2035, because of automation and artificial intelligence, we believe that GDP here in the United States will not be 28 trillion, which would be, if you drew the growth, linear growth, that's where it would be, but instead will be $40 trillion. And it is our job, focused only on innovation, to figure out where that extra $12 trillion is going to come from, and then to educate and orient our investors, of course, but also parents and grandparents. You know, how should you educate your children? You know, how should you steer them so that they are on the right side of change? Because there are going to be so many exciting opportunities.
Now that we know what Cathie Wood said, I know that some people are already saying, well, this video wasn't valuable because Cathie Wood did not mention AMC. Well, let me tell you something, AMC stock family. She is not supposed to say AMC. If she says that, then her reputation is going to get lowered. And the simple fact of the matter is that a lot of these investors, they have already negative biases towards stocks like AMC and also GameStop. That's just how it is, because a lot of meme stocks, these are considered meme stocks stocks. I don't know why they're considered meme stocks because the fundamentals are improving day by day. But also, aside from that, AMC and GameStop, a lot of investors are not allowed to really speak on these. Let me tell you something. She mentioned blockchain. She mentioned artificial intelligence. And let me talk about blockchain really quick. You know what company is also allowing blockchain? The one, the only AMC Entertainment. AMC Entertainment, by the end of the year, is supposed to allow blockchain payments, especially through Bitcoin and Ethereum. And not only that, they're also adding more cryptocurrencies to that list. And also, let's really quickly talk about artificial intelligence. Yes, artificial intelligence. How does AI relate to AMC? AI relates exactly to AMC because who was the one, who were the people, who was the movement that decided to create this short squeeze 1.0 all the way going from $1.50 all the way to $72 a share. A lot of AI bots, they recognize that there is an insane amount of volume coming in. They understood the surge before anyone else did. They knew that something was going to happen to this equity before anyone else did. And that is exactly why there were so many people buying the stock. The only ones that didn't were the hedge funds. And so the hedge funds, they end up having that short squeeze. And yes, even they too also had algorithm bots, but they did not use it because they simply thought that the algorithm bots would not work. But again, what does Cathie Wood say? Artificial intelligence is powerful. And in this case, who ended up winning? The artificial intelligence or the hedge fund? Artificial intelligence really won this battle. One more concept that she also notes is that the world will never change. This is what a lot of companies, this is the misconception that they have. However, how is the world not changing when we have an 87% growth over just one quarter? How is the world not changing when last quarter 2,253% sales percent change? Not only that, how is the world not changing when we have a resilient movement like this? The group RS rating is a B-. And also, let me tell you about the group leadership. For those of you guys that do not know yet, AMC is actually ranked higher than Roku. Yes, ticker symbol ROKU. This is a almost $400 stock, or it was a $400 stock, and now it is at $300 a share. It may even be lower, and yes, it is lower. But all the way over here at the peak, it was almost $500 a share. So if AMC is ranked higher, this is not possible without the world changing. A stock like AMC would never be ranked this much higher, but the world most definitely is changing, and there are more movements going on right now, like the Reddit movement, which really helped AMC stock go to exponential lengths. Definitely exponential, not linear whatsoever. And she specifically says that she wants investors educated. Yes, she wants children educated too, because there will be so many exciting opportunities. And let me tell you, if you missed out on the AMC opportunity, now there are so many articles, like the Motley Fool. They're now saying what AMC stock would have been worth if you invested $1,000 in the beginning. See, those are the articles that are coming out right now, but at that point, it's too late. We already know about the exciting opportunities that already happened. So therefore, it is kind of peculiar why these articles, they start talking about how much $1,000 would have been worth if you invested at around $5 a share, $1.50 a share, and got it all the way to $72 a share. At that point, it is too late. Many investors did not know about AMC at that point, so really, what's the point? But Cathie Wood, she understands this. She acknowledges it, and she understands that there are many exciting opportunities in the market right now, and there will continue to be more exciting opportunities in the market. And yes, AMC most definitely was characterized as one of the exciting opportunities in 2021, and in my opinion, it will continue to be an exciting opportunity throughout this year. And if the price target doesn't reach this year, it will continue until the price target is met for each individual, because all of us, we have our individual price targets, and some people are not selling whatsoever. They are holding this stock until they decide to sell, at least until 1 year later. I hope this clears a lot up about AMC, because yes, I do understand a 5% drop that does create a lot of FUD. I really think it's important that we just take a step back. We understand that this is the daily chart. This is not the 1 minute chart. We need to stop scrutinizing the 1 minute candlesticks, because that will create more fear. That will create more FUD. And we do not need that right now on top of this declining volume. We need as much volume as we can get. This is a 50% drop. A 50% drop is not what we need. But let me tell you something, the group leadership, we're still good. And the fundamentals have not changed. It's very interesting because in the beginning, we said we want nothing to do with the fundamentals. But now we actually have a solid paradigm. And this paradigm will be very important, because now we know that we can justify AMC to how we would like, because we know that there are fundamentals backing this up. Now with that being said, AMC stock family, thanks again for watching, and I'll see you guys next video.